Good morning, everyone. So we're going to have a look at metals and mining, but I think I want to focus on primarily gold miners because I think there's an awful lot of sentiment mishaps that's happening in the market at the moment. Even though the gold price is close to 1300 and everybody assumes it's going to break out, it might break out, but I think it would be a false breakout. I actually think it's going to start breaking down. And my suspicions have been from the actual miners themselves. It seems like the miners know something that the gold price doesn't, because there's massive weakness in miners. Now, I know you're probably looking at Newmont Mining and saying, wow, but Newmont Mining, okay, this is a different story. Newmont and Goldcorp are going to merge together to create the biggest gold mine on the planet. And Goldcorp was up 7.7%, I believe, and Newmont dropped 8%. So this isn't a clear reflection on what's happening in the market, but what is happening in terms of what definitely looks realistic to me is that miners themselves, they look like they're quite heavy right now, irrespective of margin expansion. The price of crude oil trading around $50 is a massive positive. It's a massive discount to where it was some months ago. Interest rates are much lower, and at the same time you've got the gold price much higher. So margin expansion in these companies is absolutely huge. The price should absolutely be skyrocketing, and it's not. That's a massive red flag to me. If miners are not shooting higher on the fundamentals that are beneath the market, I tend to believe that one of two things is wrong. They're either going to catch up to the upside and they're going to tear higher like they did back in 2016, or the price of gold is going to drop lower. That happens to be my view right now. I still remain patient, and for certain, based on this chart here, I think you can understand why. Now, I didn't know it was going to be a merger news that was going to cause this to drop lower, but it was perfect technical analysis. You got a bear flag, breakdown, we've got sideways consolidation to the upside, and this is a mess, meaning it's corrective, back tests, and then it drops 8% on the news that they're going to merge. However, you'll see that most of the price action that we're seeing is rather heavy. It doesn't look very positive at all, not to me. So I'd be definitely careful in miners, but I do think the next drop lower is going to be the low. People that have been buying miners, right now they think the low is in, and they've been calling the bottom every single time. So if this is not the bottom, hopefully they all die out and those weak hands don't come back into the market and we'll buy up the cheap shares. That's certainly my view and what I'm hoping to do over the next couple of weeks. So my target remains the same with Newmont. 2750 is a good buying opportunity. I think 2750 would be a good long-term buying opportunity, and as I said, if crude oil does continue its downtrend and we only get back up to $60 to $65 per barrel, well, then you're going to have massive margin expansion, because the biggest input, one of the biggest costs for a miner is fuel. So crude oil, gasoline, etc. So it's a massive positive if that's dropping. Interest rates, if the Federal Reserve are transitioning, we might turn into a range bound area right now for bonds. They might be quite a boring trade over the next couple of years, but that's also positive for gold miners that have leverage. And of course, with the transition to monetary policy, it's going to weaken the US dollar, and it's going to drive gold higher in US dollar terms. That's another positive. Margin expansion. If their cost of production is much lower and they're selling it at much higher costs, they're making an awful lot more money, more profitable, and you want to own them. So that's the ideal scenario. So at 2750, I think this could be a long-term buying opportunity. When does it come? Probably over the next couple of weeks or so, if it continues this kind of volatility to the downside. But my conviction that we get down here is quite high. So wait for 2750 on Newmont, and I think that would be a good buying opportunity. Upside potential, let's take it step by step. We're probably going to make a new high. Likely, we could probably make 100% in this easily on the upside, and that would be a very realistic target to have for Newmont. So next, let's have a look at Goldcorp, and I don't have this charted out because it completely failed here and collapsed. But one thing I'll show you here is the reason I added this in here is not necessarily to buy it, but to show you the price action. So we dropped in Newmont and we popped 7.7% here in Goldcorp. The obvious thing to me is it didn't hold the highs. So although it popped higher, it sold off throughout the day, meaning it's not a very strong rally. If you go back to here, now I don't know the full pattern here, but this definitely looks obvious to me. 1, 2, 1, 2, 3, 4, 5, 4 back to the prior degree wave 4, and we make a new lower low. So although this jumped 7.7%, to my eye, we've still got another lower low to come, just like Newmont Mining, and potentially across the board in mining assets. Moving on to Pan American Silver, and so silver itself, it looks to me like it's got the best chance of actually breaking out. Pan American Silver, will that rally? We tend to see miners only rally when silver rallies. However, there could be the exception based on a fundamental catalyst. With Pan American Silver, we have 5 up off the low here. 1, 2, 3, 4, and 5. We broke out slightly. I'd expect right now this is the start of a pullback. I don't think this is going to make a new lower low. I think this could be a pullback because this looks like 5 up. Could be wrong. I'd be waiting for the broader markets to bottom out. And if, for argument's sake, Newmont made a new lower low, Goldcorp made a new lower low, and this was making a higher low at around the 61.8% Fibonacci, I would be buying Pan American Silver based on relative strength. This has been a lot stronger than any other gold miner, and it's held the majority of its move since 2016, which is very positive. So anyway, the moral of the story is I'd be looking for this to pull back before I'd buy it, and then, as I said, I would expect it to start pushing higher for the wave 3, likely within a wave 1 of a bigger degree wave 3. We'll make that decision up very soon, but for right now, wait for the pullback. Next on to Agnico Eagle Mines. As I said a moment ago with Newmont, we're having massive margin expansion, and good quality, well-managed companies like Agnico Eagle Mines are not taking advantage of it. Not only are they not taking advantage of it, but this chart pattern is telling also 1, 2, 3 up for A, 1, 2, 3 down for B, 1, 2, 3, 4, 5 up for C. That's a classic corrective pattern, and I think we're almost ready to drop lower. Maybe a slight higher high here and then shoot lower for that final 5th wave. Where does the 5th wave come? For right now, I have it at the end of the channel, but that could be a little bit extreme. I think we're going to have to wait and see how it plays out, because this channel might be in the wrong area. I might have to move it closer to here. So that this wave 5 is really subjective. We'd need to see 5 waves down to give us conviction that a low is in. It's more conviction for me that right now is not the time to be in metals. While most metals investors are high-fiving each other, it just doesn't look right to me. Not right here. What could change the narrative here is very simple. The S&P 500 jumped 12% in just a couple of weeks. And why does that matter? The top 1% pay 30% of the taxes, and if S&P 500 drops, well, the top 1% are not going to be paying taxes anymore because they're making a net loss instead of a net gain. And so the federal tax receipts collapse. Massive portion of taxpayers don't pay taxes anymore because they're not making any money on their assets. And so that causes the Federal Reserve to transition because there's no money in government. Now the S&P 500 rises 12% in 2 weeks in the new year, and now investors are paying taxes again. So you have this pendulum swinging between hawkish and dovish, and it's all dependent on what's hawking with the equity markets. Higher equity markets, we could see the risk of the Federal Reserve actually transitioning again to a hawkish tone. Now, I don't think that would be the right move to make, but it wouldn't surprise me. And so that's what we could see here into March, is the Federal Reserve make a massive mistake, raise interest rates again. They'll continue raising interest rates, but at a slower pace. And of course, that just chokes up liquidity and we drop lower one more time. That could be the case. Next on to IAG, and I changed this chart last week and I'm quite comfortable with the change. I think this was a 1, 2, 3, 4, 5. A 4th wave up to the prior degree wave 4. Now, as you can see, this is up in 5. So I will give you this. If this retraces with the rest of the market, Newmont definitely looks like it's going to make a new lower low. And we've got a perfect pattern on Agnico that suggests that it should be a lower low because it's up in 3. If both of those make a new lower low, and this ends up being very similar to Pan American Silver in the sense where we get 3 down for an A, 3 up for a B, 5 down for a C, and we make a higher low. This is another miner that I think you want to own. For right now anyway, I'll continue what I've been saying. We are to expect weakness from here, and I'd be selling out of gold mining positions just based on the fact that we might make a new lower low. Normally, if I bought the low, I'd be holding it to the highs. In this case, I don't own the low, but if I did, I would be selling it around here, as I said, just for the risk that it could make a new lower low. There could be better opportunities. And I'm almost certain there is going to be a better opportunity to buy in anyway. So IAG, expect more downside. Next on to Nova Gold, and this went from breakout to false breakout to potentially breakdown. Now that would change everything, because this 1-2-1-2 pattern would go down the toilet, and that's likely what's happening. So that's likely not a 1-2-1-2 pattern, because we were expecting one more higher high here to put in 5 waves up. Didn't happen, started to break down. What could be happening here is this X wave is actually here, and we make one more lower low here. This could crash down again, another lower low. This would have to come down in 3 waves for the Y wave. So 3 down for a W, 3 for an X, 3 down for a Y. Again, it's going to make a new lower low if this is correct. I'm starting to see an awful lot of confluence in this idea, and as I said, I think and I'm leaning towards there being more risk in gold miners than what the actual metals suggest themselves. In theory, all of these should be absolutely tearing higher, and it's not the case. So that should be a red flag in itself. And the last miner of the day is Coeur Mining. Small company, not something I normally buy because the market cap's too small. I think it's around $500 million market cap. Anyway, Coeur Mining. I've changed this slightly. I have had to change this slightly. I had a wave 1 coming in over here, and as I looked at the chart, that wouldn't make sense because this would be down in 3. So I've moved this over to here, and I'm assuming that this is some sort of flat correction. The reason being is because this breaks down in 3. If I was wrong, this wave 2 would actually end over here, and that would mean that this wave 3 is down here. We've got a new lower low to come, and this wave 4 is right here. Why? Because this would be a 1, 2, 3, 4, 5 of wave 3. Now I don't think that's the case, as I said a moment ago, because this here is not impulsive. It's down in 3. So I think this is an A, a B, and a C to complete off a wave 2 flat correction into overhead resistance. Then we break down into a wave 3, which completes here. Some sort of corrective mess here for a wave 4. It's shallow, which also gives us confidence that it is a wave 4. And then we break down there for the final 5th wave. So I do think a low is in Coeur Mining based on the chart pattern. That being said, just like the past few charts that we've looked at that we do think a low is in, I am expecting this to pull back quite immediately. And again, I'd be looking for a higher low in Pan American Silver, in Coeur Mining, the chart we're looking at the moment, and also IAG. I'd be looking for higher lows while the rest of the market makes lower lows. Until that happens though, I'm still spectating. We are going to get better opportunities. Even if this is a wave 2 pullback, we'll be buying in for the strongest wave 3, so don't worry about that. Anyway guys, this is the last chart of the day, so if you have any questions, please do reach out, and have a fantastic day. All the very best.